Session. Gold has historically been a safe haven during periods of uncertainty, and 2025 was no exception. Gold prices reached unprecedented record highs this year. For India in particular, the world's second largest consumer, gold serves multiple roles.
Absolutely. It's been a meteoric rise for gold. Now, our next speaker brings over 35 years of experience from some of the world's leading financial institutions. He started his career at, no surprises for guessing, Goldman Sachs, and held senior roles at UBS and Credit Suisse, where he most recently served as the global head of fixed income macro products. Now, as CEO of the World Gold Council, David shapes the conversation around gold's vital role in global markets. He often says, and I quote, "With global debt soaring, gold isn't just a safe haven, it is the compass investors need in uncertain times."
In fact, his impact goes beyond finance. Through sheer determination, he has already summited Mount Everest 5 times between 2005 and 2017, raising over 1.5 million pounds for the NSPCC, including the first ever North to South Traverse. His inspiring journey was brought to life in the film Sulphur and White, with the proceedings then going to the NSPCC's vital work. Please join me with a big round of applause in welcoming David Tait, CEO, World Gold Council, who will be in conversation with Hina Gambhir, news editor, Times Now, on the new gold order.
Good afternoon, ladies and gentlemen. So, David, you didn't tell us this. Gold is scaling new heights, so have you. Why don't we start by talking about that?
Sure. Well, thank you, everyone, for having me. I'm very flattered. Yes, Everest. I've lucky enough to climb it 5 times on behalf of a children's sexual abuse charity in London. We've raised a lot of money. I stumbled into it. I had many opportunities to raise money. I tried everything, jumping out of planes, crashing cars, doing everything, but finally I stumbled across Everest, and it's been very lucrative.
Fantastic. So your journey actually began with Goldman Sachs to World Gold Council. If I would ask you to help us understand how the journey of gold has been from your time at Goldman Sachs to now at World Gold Council.
It's a little bit unusual, but to be honest, the only asset class, I was a trader at Goldman Sachs and right the way through my career for 35 years. And ironically, the only asset I didn't trade in all that time was gold. And many of the reasons I have now had this role is because I'm trying to fix the very reasons I didn't trade gold during all that period. I left the industry, the investment banking industry, in 2016 after fighting a losing capital battle, and you now know where Credit Suisse ended up. Now I'm at the World Gold Council trying to fix the very reasons that I personally shut down all gold and commodity trading at Credit Suisse globally. I'm trying to fix the very reasons I now did that.
But what is it that something that used to be considered as a dead asset wasn't lucrative then, but is extremely lucrative right now? I mean, what's really with gold? It's on fire. I mean, 2025, what a golden year it has been for the yellow metal.
Absolutely. Well, I am at pains to tell my board of 35 large-scale gold miners that it's all down to me. But I've tried to convince them that it's all me, but I'm not really sure I'm getting through. I believe the main reason that gold has rallied over the last 3 to 4 years, and many people have got hypotheses, but I'm very sure of this, is the ever-increasing levels of sovereign debt throughout the world. I believe that tariffs and the macroeconomic stories that we see every single day are more or less sideshows to the underlying fear that people have deep down inside them that at some point, perhaps, sovereign debt will run away with itself. You saw an example of that maybe in April with Scott Bessent when he had to intervene. If that ever happened, no academic has even figured out how we fixed that. And so that's what I think has been underpinning all gold buying over the last few years.
And where do you see it going from here? Do you think even 2026 is going to be similar to what we saw in 2025 vis-a-vis gold?
Yes, I do. I think there are 6 really good reasons why gold should go higher. I think it's deregulation in China, which some of you may have heard about. I think that's going to produce an enormous push to gold. I think what's happening in Japan with an older generation passing on trillions of dollars to a younger generation who are adept and experiencing inflation and stress in their lives for the very first time. What's happening here with the younger generation grasping ETFs and other digitalized forms of gold alongside their jewelry, which they will never discard. Then you've got the debt I mentioned, and then you've got interest rates, and you've got the currency and geopolitical stress that we've grown to live with over the last few years, somewhat bizarrely. But how many times do you hear the word nuclear exchange mentioned nowadays? 10 years ago, that would freak everybody out. Now it's almost a daily occurrence. So all those things point to a much higher gold price, in my honest opinion. But you would expect me to say that because I run the World Gold Council.
But if you're saying that the trend is going to continue for some more time, essentially you're telling us this era of fear and uncertainty is going to stay for some more time, even though Donald Trump, the US president, keeps saying again and again that he's ended many wars, he's going to end many other wars as well.
He has his own interpretation of success, shall we say, and it differs from mine. I think the only blot on the gold horizon could be a situation where Mr. Trump, who is remarkably lucky, gets really lucky with the US economy, manages to generate 6 to 7% growth, manages to close his current account deficit, and manages, if he's lucky, to project the long-term $37 trillion debt pile as coming down at some point in the relatively near future. That is what no one's really expecting him to pull off, to be perfectly frank. And if he did that, the people who have been moaning or calling currency debasement, that contingent of people, I think they would have a different problem on their hands. And that is perhaps the top of the gold market. But probability adjusted, Mr. Trump pulling that off, I think it's a very low probability. There's far more reasons why gold will go higher in the future than lower.
You're saying that's the only occasion that could really dent this rally or stop this rally?
In my honest opinion, yes, because I don't think it's driven by Ukraine. I don't think it's driven by discussions about Taiwan. I don't think it's driven by tariffs. I think these things come, these things go. The one thing that has not gone and has only got worse is the financial stress generated by profligate governments. And the UK, where I'm from, is one such government. Can't stop spending, doesn't have any growth, can't stop spending, and in order to justify its existence, it borrows and then borrows and borrows. And eventually markets and investors grow tired of that. And eventually that bubble will burst. And when you saw Mr. Trump introduce his tariffs in April this year, you saw the entire US dollar yield curve, instead of steepening, it jumped in one big jump, which was a loss of trust moment, which none of us had ever seen before. That's when Mr. Besant stepped in. And because if that yield curve had stayed elevated, the ability for the US to fund itself, fund its deficits, fund the interest on its deficits would have been questionable. And that is maybe too strong a term, but a financial Armageddon that we should all really be rather worried about.
Bottom line is the rally is going to continue. Fear, this era of uncertainty is here to stay. Any level that you have in mind, because brokerages are looking at some $6,000, in the near future by 2026?
I am duty-bound not to mention any numbers, but privately I will always mention them. But $6,000, I would say, feels very close.
Very close, like 2026?
It would not surprise me if you look at the rate of increase that we've had over the course of the last year. It does amuse me sometimes when we get people who used to occupy my seat at investment banks predicting with a 4,400 gold price as an example that by Christmas 27 it's going to be $4,600. You know, those really brave economists out there. I think that's a bit laughable. I think it's very likely to be a lot higher. I'd be very surprised if it's not. I would be surprised if Mr. Trump managed to pull it off. But like I say, that is the one thing in my mind that would tip the balance slightly against it. But watch that debt pile, to me, is the biggest thing.
Interesting. At least you've given us some number. Talking about another reason that's really leading to this kind of a rally in gold that we are seeing, the central banks across the world, in some countries specifically, buying a lot of gold. Why is that happening? Is it normal? Because it used to be about much lower than the current levels. 400 into 500 is what we are looking at. What is the trend that we can expect?
I think it's important to understand that many central banks that we speak to as the World Gold Council, we have remarkable relationships with many of them. Many of the developing central banks have relatively low levels to their Western counterparts, and are being led by that ratio of reserves. And many of them have a lot more buying to do. It's also important, in my opinion, to understand that they run their portfolios very much like individuals do, like I do, like you do. And as a consequence, feel the necessity to hold a contingent part of those reserves in gold. Many of these countries have obviously either don't have fully floating exchange rates or have gone through bouts of violent inflation or deflation and feel the need to build those reserves. Lastly, of course, they themselves are fully cognizant of the sovereign debt crisis, probably better than anybody else, and feel rightly that they should be accumulating gold. Then, of course, they're subject to the very normal news that we all are, that the world is a dangerous place, that perhaps reserves in one place that you had are no longer sacrosanct, that you might forfeit. All these reasons are contributing towards that. So I expect to see the central banks continue to buy, but they're not the sort of investors that I used to, or traders that I used to live and breathe with. They will sit patiently, I imagine, and whenever there's a retracement, they will be buying gently, consistently going forward. There is one school of thought that some central banks may reevaluate their holdings because of the nominal value has increased over the last few years. Hence, their weightings might have gone slightly higher than we imagine them to be, if you can understand what I'm saying. But I still think, on balance, the vast majority of them have a lot more gold to buy.
And Japan, in one of your interviews, you mentioned is a new entrant in this party.
Yes, it's a remarkable phenomenon. I can't quote the numbers off my head, but I think it's the vast majority of assets held in Japan are held literally in cash. I think it's, don't quote me, roughly 50% of these assets are held in cash and almost literally at home. That generation are passing that money down to younger generations. At the same time, the money managers of the old era are moving on, and now we have younger money managers who think somewhat differently, many of whom have never grown up, have never experienced inflation. For 30 years of my trading career, Japan was in deflation. They've never experienced nationalist tendencies. They've never experienced threats or tension in the region. All these things have been contributing to, I think, a great opportunity for the world, for the Japanese population to recognize the value of gold. And I think it's an enormous wallet. Again, I can't, off the top of my head, remember the numbers, but I want to say something like $4.5 trillion of assets that could be allocated to gold. And I think that's a huge driver that has been unestimated so far.
Interesting. Do you see something like this happening in India as well? Because historically, Indians have also, kept gold in their lockers. Now all of that is being passed on to the next generation. And the current generation is focusing on innovation, be it an investment or, anything that they are doing these days. Are you seeing similar kind of pattern or behavior in Indian consumers as well?
Yes, I fully expect the younger generation, which is, I think, the lowest hanging fruit around the world, which is the Indian younger generation across your country, are going to fall in love with the opportunities of investing in gold in different ways that you could say their parents never had the opportunity to. That doesn't mean to say that they're going to set their jewelry aside. I think that is embedded in your culture to a degree that it will never go away. But I do think the younger generation have the opportunity of digitalized gold, as an example, stable coins, regulated products, most notably ETFs, which I think are the real low-hanging fruit. They're easy to understand to most people, especially young people. They are listed, they're regulated, and they are backed by physical gold. I think, and the adept nature that the younger generation have with electronics, and it's the ease with which you can buy them, I think this is one of the huge growth areas, likely growth areas, and we're seeing it. The rate of ETF opens in India has been remarkable. I think we're up to 25 now. I see that as only growing, I must admit, and I honestly think the younger generation need to be listening.
What do you say about Indians and their relationship with gold? What is your assessment?
It's completely unique. It is unique throughout the world. I think it is almost hard to articulate when I go around the world. I did expect, actually, when I went my first visit to China, to witness something similar. But it's the Indian relationship with gold is absolutely remarkable. I do think that you have a great opportunity to use the assets that you have at home. I would recommend that someone figure this out in due course and somehow monetize it and get it used within your economy. I've read and understand many of the different problems and theories that come with this, but I do think it's an area of growth. I do think it's a way that people could leverage. They could leverage the assets they have. They could lend. They could collateralize. And I think it's another driver of growth for your economy going forward. Much of the gold that sits around the world has been sitting there largely redundant. In fact, just to digress slightly, we have just opened a new gold market in London called Pool Gold Interest, which is a way of central banks and other banks, the banking community, to use gold as digital collateral for the very first time. And so innovation is hitting this gold market, and I think this country is ripe to develop it and use it like no other country on earth.
Are you trying to say that, as some estimates suggest, that India...
Suggesting changes to tax systems that would support that move, but if there was a way of bringing the bar and coin contingent of that gold into the open, such that it can be used, maybe digitalized, maybe leveraged, maybe lent, maybe used as collateral in the economic system of India, that could only be a benefit. I think there's many people throughout India that would benefit from that. In fact, we've seen a drop in recycling over the last few months, over the portion of this year, and in fact a 118% increase in the desire to lend and use that gold for finance. And I think that shows a microcosm of what could be used if you were able to bring some of that 25,000 tons. Perhaps, obviously, jewelry is somewhat more complicated, but the bar and coin element of that could be used in your economy far better than it is right now.
What's going to be your advice to the finance minister in this regard? Finance Minister of India. She was here this morning.
Work with the industry to find a solution. I would ask her to support the gold. I suppose it's major. Get it out into the open so that it can be used by the mainstream economy to leverage and grow. I would ask her to find perhaps even a way of a tax holiday to bring it into the open. Find a way of bringing it out into the open such that it can be used. It's sitting there redundant, and that's a travesty for this economy.
It's, the way it has moved over the last few months, it has clearly shown to the entire world that it's no longer that dead asset as many used to consider it. I was speaking with Jim Rogers, in fact, a couple of days ago, around Diwali to be precise, and I asked him, given the levels that we are seeing gold at right now, do you think it's the best time to perhaps sell some part of it and make money? He told me that he's never going to sell the gold that he owns. In fact, at every possible opportunity, he's going to buy more and more. Do you think that's the right kind of advice?
Well, this is an interesting point because when I first joined the World Gold Council, I obviously came from investment banking where diversification is everything. And I remember sitting at my first board meeting with 33 mining CEOs, and I recommended that we diversify our personal gold holdings, at which point I almost lost my job. Such was the response. And looking back 6 years, if we had done what I had suggested, we would have lost a fortune. That being said, it's ingrained in me to diversify. It's part of my DNA as a trader. It makes common sense. And in fact, we as the World Gold Council hold to that line that gold should form part of a portfolio, not the whole portfolio for obvious reasons. So I understand why Mr. Rogers and others that I've met feel that strongly about gold. Fiat currencies have only declined in value over time. By its very nature, you can keep printing, and that's what we see. We see these debt levels, we see this debasement, we see the intrinsic value of these currencies declining over time, and that gives the people who really, truly believe that gold is the answer to this all the fuel they need. My personal recommendation is always take a profit, always diversify, but always have gold as part of a portfolio. Just depends on your weighting. I would never have it as a tactical asset, as in don't get in, get out. Just have a different weighting, but always have it. And I think that is what you see from central banks, and that's what you see from most clever traders. However, take you back to 6 years ago, if I'd done that 6 years ago, I wouldn't have had a job by now. Something amusing, really.
Glad you didn't do that. Okay, now, there are several people in the country, in India specifically, who love gold, who always used to look at jewelry as an option to invest in gold. But that sort of has come down because jewelry in the retail market is expensive, and most people who want to now invest in gold, they prefer other instruments. What is the outlook on that front, in your opinion?
This year's seen, I think, a 31% decline in gold jewelry purchases throughout India, but I think we've seen a 64% increase in investment flows. I think that is mirrored around the world. Obviously, keenly felt in India because it has such an affinity with gold jewelry. But I would expect all these pauses in the gold price that we do have from time to time for people to readjust. I think this is mirrored around the world. I fully expect, for the reasons I have already articulated, this constant move into investment bars and coins and electronic versions of the same things, ETFs, stable coins, and other forms of regulated digital products to continue. Like I've said, I can only really see one scenario where that will shift back. But is this the end of the Indian gold jewelry industry? Absolutely not. This is embedded in your culture, and any pause, it seems to me, in the gold prices, you readjust and you continue on buying. I do think your younger generation, as I mentioned, should really focus on other forms of gold buying to sit alongside their jewelry. In fact, I think everyone should.
Do you see a mindset change already happening, moving towards the digitized versions, ETFs, etc., instead of looking at jewelry as an option?
No, I think people opening their mind. I wouldn't see a migration. I would see that, frankly, the rise in the gold price has put it on the front pages. I think many people who are totally occupied with Bitcoin and other things suddenly have noticed gold for the very first time in their lives. It's started to be front page news. People can make money from it. They're opening their mind to the ideas of these different instruments. So I see it as complementary. I see it as complementary to Bitcoin. I see it as complementary to jewelry that people have become wedded to as well. I have different opinions on different asset classes. Some that are known as crypto gold, I would be very careful of. I would wait until things move into a regulated sphere. But like I said, ETFs already are. The Genius Act in the United States is leading other asset classes, gold stable coins as an example, into that arena. But until they are, be prepared to lose that money. I don't want to cast aspersions on that world, but there's a reason why many of them have not succeeded. Most gold-backed stablecoins are, frankly, in relative terms, relatively redundant at this point because there's relatively low use case for them, and there are better asset classes that are a lot cheaper. Back to ETFs again. But I see this as a constant changing landscape, and who knows where it's going to end up? Who knows what the regulations will bring in? Who knows what platforms that are currently unregulated will become regulated, and how comfortable investors, funds, investment funds, pension funds will be with these assets going forward. But the one thing you must have alongside these assets, I say again, is the constant. The one thing that is the diversifier that is negatively correlated with nearly every other asset in the world. That's the important thing. And that is why Bitcoin, in my opinion, failed to function as it was designed, was that it was fully correlated with equities. So just buy more equities. What's the point of having two? But gold is distinct, and I don't think it's ever going to change its spots.
What is your biggest fear vis-a-vis gold, given what has happened with the yellow metal in the last 1 year specifically, and how things have evolved within countries, their behavior, relationship with gold, how that has evolved over the last few months?
My biggest fear for gold, my biggest fear for gold is the supply chains. I would say my biggest fear is that we do not solve for what is a bit of a travesty throughout the world, which is the artisanal and small-scale gold miners throughout the world who are supplying 1,000 tons into our market on a yearly basis, the conditions they work in and the abuse they suffer needs to be changed. This flies under the radar for many people in this room, I'm sure, and others. And I think that is a blot on the gold landscape that we need to solve. And so for India, that has a relatively nascent investment market, if it wants to force itself into the front of the investment community globally, it needs to make sure that supply chains are secure, that you can rely on them, you know where the gold has come from, you know who has dug it up, and you can prove that. That setting your stall out in that regard, which is a real mission of mine, will make an enormous difference to international investors around the world and turn India into one of the major gold centers on the planet. I know it is from a jewelry perspective, but in order to attract the major asset managers and the major banks in the world to regard India in that way going forward, you need to have certainty, you need to have trust, you need to have transparency. That's the biggest threat to the market. Sorry.
Trust and transparency. Now, given the current set of concerns that you have vis-a-vis gold, what are going to be some key priorities for World Gold Council going ahead?
The Indian Association for Gold and Standards, IAGS, is something that we set up over the last few years. It was a remarkable story 6 years ago when I was first introduced to the industry in India. I was introduced to something like 50 jewelers in succession over a course of 2 days. I had a lot of flowers by the end of 2 days. It was remarkable. But at the end of it, there was a clear message that the industry could do with a degree of leadership because they were all very competing peers, and it was missing some form of stake in the ground around which they could coalesce. And so we established an SRO in India called IAGS, which is up and running now, and hoping to bring on board all wholesalers and jewelers throughout your entire country. We've made a great start. I think this will be an amazing thing for your industry and for the population who buys gold. I think this is one of the most important things. And perhaps, if I could go back to your question with the finance minister, I would say, if I had one ask, it would be to advocate for this body, because trust, transparency is the future of this industry, and the complete direction of travel, whether it's regulations or compliance, is in that direction. So you tie those two things together, trust, transparency, and supply chains. That is the future of the gold industry. And be under no illusion, if you do not sit inside that tent, you will be excluded because, without sounding too brash, that's my next Everest.
Do you think hallmarking was like a good decision?
Absolutely. It's by definition, that is the direction of travel. It's difficult for some to accept, I understand, but it has to be that way. You can imagine how a purchaser of gold feels walking up to two jewelers, one who is accredited under IAGES and has hallmarked products, where they know they come from, know they've been responsibly mined, know that they haven't used mercury getting it out the ground, know that children have not been used in mines from that accreditation, and a jeweler who doesn't have that. The people in the street, the population of the country needs to know that and be able to choose. And that's what our mission is, to make that very clear. People will have a choice. So it becomes a positive differentiator. The pressure to improve is always there and will never go away.
To wrap up this discussion, I would like to ask you one question, and that is for those investors who could become part of this rally in gold that we've seen, and also those who perhaps could not really be a part of this rally, who missed it somehow. What is the future of gold?
Future of gold. If you're an investor and you're worrying about whether to get into gold, don't hesitate. But as a trader, 35 years worth of trading, and you've got X amount to invest, and you're worried about this gold price level, buy half. It works wonders.
Got the answer there. Thank you very much, David. Thank you very much for
Pleasure.
speaking with
Thank
us.
you.
Thank you, David and Hina, for